Hi everyone, welcome back to my channel. Today I wanted to talk about a number of things. First of all, I hit a major milestone back in end of December. My profits were over $100,000. To be more exact, I believe it was $103,000. I was gonna make a video back then, but then I got busy and, well, obviously a lot have changed. This year, for the last 3 weeks, the stock market's just been going down. As you can see, for the last month, S&P 500 is down 7%, which is quite a lot. As some of you may know, I like following on YouTube a channel by Joseph Carlson, and I noticed his stocks are actually down a lot more. Here you can see the screenshot of his video before end of the year and his latest video. You can see that his stocks are actually down $25,000. Basically what I'm looking at is the gain, the market gain, which I actually found very surprising, to be honest, because even though my stocks are down as well, obviously, I'm definitely not down that much. So I kind of looked at mine, and I'm only down about $12,000. So around half of what Joseph Carlson is down. And that got me thinking about it. Well, why is it such a huge difference, right? And it really comes down to diversification and type of stocks that both of us own. I did mention it before, I believe, and I even made some comments on his YouTube channel as to why he's not investing in any energy companies. I remember watching one of his videos and he talked about how energy stocks are basically don't have any future because, we're going all electric cars, this and that, and he wants to invest in companies that have the future. Well, I don't actually agree with it, to be honest. Without getting too political and all that stuff, I think the oil and energy stocks here to stay for a long, long time still. For the last, 3-4 months, it's been in the news, and if you search the internet, it's all over the place, how China is running low on energy, more specific like electricity and stuff. And lately, Europe having issues as well. Right now they're in the middle of winter and some of the countries have the highest electricity bills that they ever had. Can you imagine adding bunch of electric cars on top of that? So I don't think the energy stocks are going anywhere anytime soon. And so when COVID hit and the oil at one point was actually negative, I started buying up a little bit of as well. I did own some oil stocks before that, so those are dropped obviously tremendously, but I did buy a little bit more, and I think that's one of the reasons why currently my loss is not as bad. Let's look at some of the oil stocks that I own and their performance in the last year. Here's the Suncor Energy. That's something that I actually owned before COVID hit. Then their stock dropped a lot. I believe at one point it was down to $15. And I was buying it. I basically was buying it down. I bought some at 29. I bought some at 22, at 21. I don't think I actually got any at 15 because it's easier said than done, right? When you actually see the stock falling so much, it's hard to actually put money into it. But I did got some because I was thinking, you know what, I don't actually see it's going anywhere, going away, right? I did think it's gonna rebound, and that's the thing, you're not gonna make money by investing in stocks that everyone wants to buy, because if everyone wants to buy that stock, well, the price is through the roof, right? That's how you make money, is by buying something that nobody wants. that you think has a potential to grow, and that's how you make money. Buy low, sell high, not the other way around. But obviously it's hard to do, to go against the crowd, right? Because at the end of the day, you don't want to look stupid and feel stupid because you didn't do what everybody else is doing. Here's another stock that I own. This one I actually didn't own before the COVID hit, but when it dropped a lot and when I could see all the fundamentals for it and stuff, I decided, you know what, I should buy a little bit of it. And that's one of the best performing stocks in my portfolio at this point, which you will see later. I think it's very important not to get discouraged by performance of others. Here you can see rktf performance for last year. If you remember, in 2020, basically rktf is what everyone was talking about because they were outperforming the market, and it seems like Cathie Wood was basically the genius of investing. Yet fast forward 1 year later, and as you can see, their stock is down 51%. And that's without paying any dividend or anything. And that's very important to notice, that a lot of people invest in stocks that been doing well for a while. Well, just because it's doing well for a while, it doesn't mean it's going to continue doing it. And what happens is you may invest at the height, it's going to drop 50%, and you may end up selling it and losing 50% of your money. So it's very important to do your own research and remove all the feelings out of it. Why did rktf did so poorly within the last year? Well, the reason they did so well the year before is because Tesla went up tremendously the previous year. Yet, this year, Tesla is up only 7%. To be honest, I didn't even realize it. Because every time you turn on the news, all you hear is Tesla this, Tesla that. So I actually was thinking kind of that Tesla is going up as well this year, but not really. I mean, yeah, up a little bit, but only 7% year over year. Now, what I did, instead of investing in Tesla, because you actually probably seen I have another video, and obviously I was, you can say I was wrong because I made fun of Tesla being worth $300 per share, and now it's worth over $900 per share. But my opinion about the company didn't actually change all that much. There is no way this small company that barely makes any profit is worth more than all other car manufacturers combined. And that actually made me thinking, because when I would go to a Toyota dealership, I would notice that they barely have any cars in stock. And that got me thinking, well, you know what? How are they doing? Because Toyota is one of those brands that recognized all over the world, and it's considered to be the most reliable brand, Toyota and Lexus. So I started looking at them, and well, they have somewhat low PE ratio, they had good dividend, and I decided to buy them instead. And this is, you can see the performance of Toyota. So within the last year, Toyota actually outperformed Tesla by a lot. We're talking about 7% versus 36%. And on top of that, Toyota pays a nice 3.3% dividend with the PE ratio of 10, whereas Tesla currently has PE ratio of 300. So as you can see, don't always need to invest in companies that are hyped. Nobody talked about Toyota. I literally haven't heard a single person mentioning Toyota stock anywhere. Everyone talks about Tesla. Yet, I invested in Toyota instead of Tesla, and I outperformed Tesla by a lot. Basically, 5 times? 36% in 1 year. Pretty good return if you ask me. Let's look at some of my other companies. My top holding is Procter and Gamble. As you can see, while other companies are crashing and losing their values, Procter and Gamble currently sits pretty much at the highest it's been in 54 weeks. The 54 weeks high is 165. Currently it sits at 162. And year over year, it's up almost 23%. And that shows you that you don't actually need to invest in some weird companies that making no profit, that you hope for some reason gonna go up. Those meme companies, right? You can invest in, Procter and Gamble is as solid as it gets, right? And you can invest in those type of companies and still make very good profits. 23% a year. Honestly, if I could make that on all the companies year over year, I'd be the happiest guy. Because doing this kind of stuff, you can actually become not just millionaire, you can become billionaire. 22% a year? Oh yeah. And again, it went up 23% in a year, and it's still paying dividend over 2%. And that's one of the safest dividends out there. I believe their payout ratio is like 50% at this point. Another company, for example, that Joseph Carlson doesn't own because, like I said, he doesn't want to have energy and he didn't really want to have any pharmaceuticals. He did have AbbVie for a while, but he did sell it. Well, my thought was, you know what? I don't think COVID actually going away anytime soon. They still need to manufacture tons of vaccines. And so I decided to add, I had Pfizer even before COVID hit, but I decided to add to my holdings. I actually added, I believe 6 or 7 months ago I added to it. And so look at this performance. That's for the last year. You would think that, a year ago it would be too late to jump on this, right? Because, now everyone knows Pfizer already has a vaccine, so market should take that into account. That should reflect its price. Yet look at this. Year over year, it's actually up 44%. And that's after it dropped significantly. It hit as high as almost 62. That shows you again that you just need to pick companies that doing well financially and that simply make sense to purchase, that you believe in the future. And you don't need to think about future 20 years from now. Think about for the next couple of years. This is exactly what I did with Pfizer. I have no idea what's going to happen in 5 years, right? In 5 years, there may not be any COVID and they're not going to be making any vaccines or anything. But I'm thinking in the next year or two, I think they're still going to be manufacturing a lot of vaccines and they're going to be doing the manufacturing. Now they came out with the new antiviral drug for COVID. And because, they supplying all those vaccines to the Western countries, but they still need to supply them to the rest of the world. Countries like India and Indonesia. Because right now, for example, I know in Indonesia, mostly they use Sinovac, which is made by Chinese company, but it doesn't seem to be working all that well. And so a lot of people there actually want to use the Pfizer, but currently Pfizer is very expensive. It's basically the most expensive vaccine in Indonesia. You're talking about the price, $20 for Chinese-made vaccine versus $150 or $200 for Pfizer. But once there's no more vaccines required in the West, Pfizer can turn their attention toward the other countries. They may not be able to charge as much, but they're still going to be making them. So anyway, that shows you kind of my way of thinking and how I decide which companies to pick. For example, another oil company that I purchased, Canadian Natural Resources. I actually really liked it. I accidentally came across it. I started reading about it. And I just thought it's doing phenomenally well. Look at its PE ratio. It's 13. That's such a low PE ratio in today's market. It's paying almost 4% in dividend. And so obviously, it's been going up and up and up, especially with the oil prices. As you can see, it's up 106% in the last year. It's amazing. Why did people like Joseph Carlson lost so much in the last 3 weeks? Well, because he has a lot. Well, first of all, he's not as much as diversified as me. Second, a lot of his holdings are in few companies. And yes, I know it's very similar to like Warren Buffett. But the problem with that is that if those companies do well, yes, of course you're going to do well as well. But if they don't, well, you're going to lose a lot of money very fast. For example, one of his top holdings is Microsoft. And you can see that in the last month, Microsoft dropped over 11%. So no wonder his portfolio dropped so much as well. I also own Microsoft, but it's just a small part of my portfolio. I believe like something like 2%, nothing more. Whereas for Joseph Carlson, I believe it's like close to, I believe it's like 9 or 8, like around 30,000. And considering his whole portfolio is 360, so yeah, like about 9%. Another company that I bought when COVID hit was ADP. It's automatic data processing. Very good company. I actually did some reading about it and I heard about it before. But it was always expensive, But when COVID hit, their stock dropped and I decided to buy it. Also, one of the best performing companies in my portfolio. This is just for the last year. They're up 32%. But I believe since COVID hit, for last year and a half, I believe they're up like 50 or 60%. Again, shows you that just do the research, find companies that you know, that you heard about. For example, this company, the company that I work for, they actually use this for payroll. So that's kind of how I originally heard about them. And then I heard a few other places about it, how well they do in financially. I started reading about them. And I decided that, it's a good company. But their stock was always very high. Why? Because it's a good company, everyone wants to own it. But there was a period of time right after COVID when everyone thought that, there will be huge unemployment, so they may lose some of their business, and their stock dropped a lot, so I just bought it. Here, this is something I never actually shared before with anyone. So you can actually see some of my top holdings. You can see Imperial Oil is up 127% for me. Bank of Montreal, ADP. This is what I was talking about. So basically, since I bought it, it's up 61%. Procter and Gamble, up for me 55%. And that's considering I've been actually buying into it. Even this year, I think I spent a couple $1,000s to buy more shares. Because they just keep growing. I remember in the very, very beginning, when I was just beginning to invest, I found it very hard to buy a company once their shares go up in price. When you actually see that it's up, let's say 20%, there's something some little voice in your head tells you, well, if they're up, they might drop. Now they're not as cheap, so why buy it, right? But I actually don't do that anymore, because what I did was Procter and Gamble, for example. I simply go and I read their financial statements, and I can see that the reason they're up is because the revenues are growing. They're making more money. They increasing their dividends. So right now, for example, it's not any more expensive than it was, let's say, a year ago. So I just keep adding money to it because, I find it's a very, very good company. And yes, it's actually the biggest holding in my portfolio, which is still sitting at only a little bit under 6%. But that shows you how much I'm diversified. All in all, I actually own about, I believe, 90 companies. Nutrien, that's another company that I wanted to own for a while, and it was kind of high, and then their stock dropped during COVID, and I bought it because, basically they make fertilizer, and fertilizer is very important, just like the pharmaceutical companies, right? Because the more people you have on Earth, the more, basically you have to feed all those people, right? So fertilizer is what helps farmers get more yield from the same area Tyson Foods. That actually was exactly the company, like when stock dropped, when COVID happened. I remember basically there was a lot of talk about how there might be meat shortages because one of the biggest meat processing companies, which is Tyson Foods, how they basically had some COVID outbreaks and stuff, right? But I just thought, you know what? This is one of those type of companies that, I mean, the government will make them work if they have to. Really, because we're not gonna go without meat, without food, right? And so, and also when I looked at their financial statements, I mean, they're doing phenomenally well. They've been increasing their dividend previous years by like 15, 20, 25% a year. Like, no kidding, like 25% a year. So I decided, you know what, I'll buy it. And same thing, you know, a year and a half later, and I'm up 51% on it. Should have bought more. So I already talked about Pfizer, yeah, JP Morgan, you know, like, well, mind you, all the banks are doing well right now. I also own Philip Morris. It's kind of the same thing, right? Like, it's one of those, I mean, Philip Morris is actually not exactly the same thing as oil companies because, yes, tobacco, smoking, they do face lawsuits and stuff like that, right? Especially in the Western countries, there's less and less people smoking for sure because everyone knows it's bad for you. But, you know, other countries like China, India, Indonesia, like all of those countries, right? People do still smoke, but I'm sure it's eventually going to start declining there as well. So this I'm a little bit not sure about. But for now, I'm going to own it because there's literally only a few huge tobacco companies in the world. And, well, what's going for them is that they can dictate price easily. So if sales drop, what they do is they just raise prices. And, well, you know, it's sad to say, but if you're addicted to it, you're going to buy it. Fortis is a utilities company which actually been paying dividend for close to 50 years. So I really like it. I bought it and it just keeps growing for me. Canadian Imperial Bank, well, it's a bank. MAAA, that's something that honestly I wish I would have bought earlier. But I was actually trying to see what's going to happen with the whole jobs and people paying rent and how that's going to play out, right? If you remember, REITs, residential REITs, they dropped a lot because, well, everyone was thinking the same thing, right? And it's kind of started recovering, well, because the government basically started giving people money, right? And so that's the point where I thought, you know what, I should buy it. But for some reason I just wasn't buying it, and I was putting money in other stocks, but yeah, I really wish I would have bought it a little bit earlier, but it is what it is. So I bought it. I actually bought MAA specific, like for a reason, because there's other REITs, residential REITs, but I bought this one because it's actually mostly located, they mostly have apartments in Texas, in Florida, a little bit more conservative states, right? So what I was thinking is, well, in places like New York and California, government is more likely to tell landlords that, you know, they cannot evict people, they cannot do this, they cannot do that, right? Where I find in states that lean a little bit towards right, it's less likely to happen, right? So if the person is not paying rent, well, maybe they will be able to, you know, evict that person and get somebody else to move in. So I bought those, and yeah, it's up, well, you can see it's up 41%. And I only got it for about a year ago or so. Anyway, this actually been longer video than usual, but I hope you enjoyed it. Really, let me know in the comments, like, what you think about it, you know, what are your thoughts about the stocks that I choose. You know, share with me how you specifically choose your stocks. And yeah, have a good day.